What is up, everyone? Welcome back to Blomonomics, where we take short-term swing trades and use the profits to stack long-term assets. So today's video is a huge one because the macro environment heading into December is honestly the most bullish setup we've had in months. But there are also a few major risks flashing under the surface we need to pay attention to. After we break down the macroeconomics, I'll walk you through the swing trade I've been talking about for weeks on this channel. You might be in it with me. We'll talk about the entry, which I took yesterday, what I'm doing next, how I'm managing my risk. Lastly, I'll show you exactly what my exit looks like and how I'm thinking of injecting the profits into long-term wealth building assets. So let's jump right into it. The macro tailwinds are huge and they're lining up. The December 10th Fed meeting, rate cuts are almost locked in. I believe the market has it priced in at about an 89% chance that the Fed will cut interest rates again. This means cheaper borrowing, looser financial conditions, and historically, when there's cuts, risk assets tend to run. So this is one of the strongest macro tailwinds we've had in a while. Number two, Trump's incoming Fed nominee, believed to be Kevin Hassett. So Trump announced he's chosen his next Federal Reserve nominee, hasn't announced who that is yet, and it's widely speculated that it will be Hassett. And so Hassett is known for supporting lower interest rates, favoring pro-growth monetary policy, wanting to stimulate the economy, and so on. So he'd add another dovish voice to the Fed, which makes markets love him. But here's the key. He just doesn't walk into the job. I'll give you like the quick and dirty on how a Fed nominee actually makes it as the chair of the Federal Reserve. So how a federal nominee actually gets there is step one, I believe, is the president nominates him. So Trump has nominated, not Hassett yet, but that's speculated. He'll say, this is my guy. The official nomination, I guess step two goes to the Senate Banking Committee, where basically Hassett or the nominee will have to sit in front of the Senate Banking Committee and they get grilled on their monetary policy, what they believe, inflation, how they testify all their sort of beliefs. And then if they get past that committee, they get sent to vote for the full Senate. So in the Senate, there is, I believe, 50 senators, 2 from each state, 100 senators, 2 from each state, and if you get a majority vote, so if 51 of those senators vote to pass the Fed chair, then he'll get into, or she'll get into that seat. So there's 3 levels of basic approvals. You get nominated by the president, you have to go through the Senate Banking Committee, and then you have to go through the Senate itself, and that will take place over the winter here. And I believe the next Fed chair will be in place early next spring. So that's huge that it could be Kevin Hassett. We also have December seasonality. So historically, a strong month is December, one of the strongest months in the stock market. Why? You have this sort of Santa rally effect is what they call it. So markets historically push higher the last 2 weeks of December. You have mutual funds and hedge funds repositioning. You have sort of the tax loss harvesting starts to fade. You have early December, which can be sort of like selling slows, and late December can be a really good buying period, as well as people are just generally optimistic heading into the new year. So historically, December is a green month roughly 70 to 75% of the time. That doesn't guarantee anything, but absolutely adds to the tailwinds of this month. Lastly, tech earnings were strong across the board. That was weeks ago here. We had the Mag 7 all report. NVIDIA smashed expectations. Apple, Microsoft, Meta, Google all beat, cloud revenue, AI spending, consumer tech all came in better than what was like sort of feared. So the big takeaway is the economy is not falling apart just yet. Tech is still printing money. This is another macro tailwind. But there are headwinds, and that is Japan has flipped hawkish. We'll kind of chat about why this matters, but the biggest risk right now is coming from Japan. And Japan just hinted that they may start raising interest rates after decades of doing the opposite. So why does that really matter for us? Well, Japanese investors borrow cheap yen at low interest rates and invest heavily into US markets because the bond rates have typically been higher. It's called a carry trade. Borrow low, you get paid back, and you make the spread on the interest rate difference there. If Japan's rates raise, the yen strengthens, and suddenly that spread gets wrecked because it might just make more sense to buy the yen than to buy the USD. So Japanese institutions could dump US stocks fast, and kind of unwind their positions. So this is exactly why the market kind of dipped earlier in the last couple weeks. Japan Central Bank is shifting their policy. It is a real headwind. We need to watch it. But the question is that enough to like dismantle the whole market? So long story short, we have a lot of tailwinds, a lot of things helping push the market higher. We do have some headwinds we have to pay attention to. That being said, let's get into my trade here. So we've been talking about this for a while on the channel, and that is the Bitcoin daily chart we've been watching. If you weren't here following along, I'll get you caught up really quickly. We saw an Elliott wave forming since October. So this has been in formation for the last 2 months. The Elliott wave formed. We also saw the retracement that we mapped out here. If you have no idea what I'm doing right now, I'll link another video on my bio to show you this trade in its entirety. The long story short is there was this big downtrend in Bitcoin. There's a number of reasons why I explained what the Elliott wave theory is, but after 3 big waves in one direction, buyer psychology, market sentiment tends to shift the direction. Things don't go down forever, things don't go up forever. So we use this fib retracement, this yellow, let's see if I can bring it up here. This yellow entry point right here, and that was basically, I do this every video. So as Bitcoin came down to this bottom of the 5th wave here, it started to come back up. And then when it came back down, we decided if it came back down into this yellow zone, that was our buy. And you can look at my trade at another video. It explains in detail, breaks down all of these indicators that I'm using. But that was our buy point. So yesterday, yesterday, the market pulled down here and hit our buy zone. And so I entered this trade with confidence. Now, mind you, I used a very small portion of my portfolio. I don't go all in on a trade like this. And typically I'm investing in long-term investments, about 80% of my portfolio. About 20% of that is reserved for swing trading. And in that 20%, I used a small portion to take this trade. Now, I didn't have a lot of dry powder on the sidelines. I don't have, most of my cash is already invested in trades right now, like we've been talking about on the channel, Duolingo, PayPal, Celsius, and so on. So my money is in the markets because positions have basically come to fruition here in the last few weeks. But I did have about 6,000 USD on the sidelines that I put into this trade, and I did this at a 2x leverage. So don't necessarily recommend 2x leverage because you really have to be right. You have to also time the market. You can't just hold IBIT, for example. So what I bought was 200 shares of BTFX at $29 here. And since yesterday, we're already up 17% on that trade. So we bought right in this, where did we buy here? We bought right at this red candle here. When it entered, it dipped down for another couple hours in the day. It closed back right where we bought, right near where we bought it at the end of the day. And then today it just shot up. And that's what we thought exactly was going to happen. So it's shot up. It's continued to go up here after hours in the markets. And then we have our take profit zones, which is the 1.618 natural exhaustion point in the market, as well as 2.618 natural exhaustion point in the market. Why this is a good trade is that we set our stop loss down below the lowest candle here. So there was about 6% that we could lose on the trade if we got stopped out. But there's about 32% to gain on the trade if we trade all the way up to our second exhaustion point, the 2.618. So because of the risk to reward weight ratio, even if we were to lose this trade and we took another 3 or 4 trades very similar and won one of them, we'd still be in profit. And that's what we're trying to do, is manage our risk here. This trade did go our direction. So now we've since moved our stop loss up so that we cannot lose on this trade, right? We will make money or break even. We cannot lose on this trade because just like we thought, the market did what we thought it would do. We bought at the low. We've now timed the reversal, and we're going to see if this reversal carries on, right? We have no idea what's going to happen tomorrow, but we do have our exits, which is 1.618 and 2.618. So this was a trade we've been talking about for weeks. If you do not know what I'm talking about and you're like, what the heck is going on? Subscribe, follow, like. I'll link my other video inside this YouTube video, inside the description. watch it, and stick around and learn to identify. And then again, this is not financial advice. I'm not a financial advisor. Everything we do here is for entertainment purposes only. But if you do have the appetite for the risk, then you could join in on the trade as well. So I take a small portion of my portfolio, 6K USD. I entered the trade at 2x leverage. We're up $1,000. If we make it to our complete exit here, I think the profit is going to be about $3,600 or so dollars, which I know that's not substantial, but we could hit that in a week or two. And for some, that might be a paycheck. For some, that might be 2 paychecks. For some, that might be half a paycheck, right? But the idea here is that we're using our money to make money while we're out working, while we're out with friends, while we're doing whatever we're doing. We have these trades running in the background. We've calculated the risk. We're entering by not only the technicals on the charts and data backing that, but also the macro environment, which we talked about, which is quite bullish right now. And then we have our exits. If I exit, what would I do with this cash? So I'm going to do a whole series about my long-term investments here, which is 80% of my portfolio, and how I kind of build long-term wealth. But obviously we want to diversify, but here's something to just keep it simple for today. I've picked 4 stocks here that we could invest in, and I'll show you why these might be important. So one of them is Realty Income Corp. So this is a REIT, a real estate, it's basically real estate exposure without being a landlord. So a REIT, or real estate investment trust, is basically a company that owns real estate and pays out rent to its shareholders. Sorry for the sirens here. They're publicly traded, so you can buy them through your brokerage account or even inside like a 401k. And so why would someone use REITs instead of buying a property? Well, maybe you don't want to buy out of state. Maybe you don't have enough for a down payment. Maybe you don't want to be a landlord. Maybe all of the above. So who knows? So this is one long-term standing REIT. It's called Realty Income Corp. It pays a monthly dividend. So you have the dividend down here annually, which is 5.62. Great long-term investment to get exposure to real estate. Real estate is a hedge against inflation. I'll explain that in another video, but typically over the long run, real estate goes up. I know that we could be entering some recessionary periods here, but a REIT is typically good because renters continue to rent real estate. So we could put it in a REIT here. If you look, over time, over the last 20 years or so, it goes up and to the right. That's what you want to see out of a chart. Another thing that we could do here is like a consumer staple. So, I do believe that we could be entering into some recessionary periods potentially if we don't have that soft landing. These are durable. They're dividend paying. Again, Pepsi here pays a 3.83 dividend. There's lots of other, consumer staple stocks. Like I believe Pepsi owns Kellogg's and other food companies. So you're basically investing in food. People are going to need food regardless of the economy, right? And so that's the idea here. Pepsi sitting pretty low from its all-time high. It's down, 23%, 15% here. Thought it was down more, 20% here. So, I think it's a decent buy at this point. Another thing that you could be investing in would be like healthcare stocks. UnitedHealth Group, again, a bit recession-proof. People are always going to need healthcare, and so on. Lastly, one that's not necessarily dividend paying, but I love, is Berkshire Hathaway. So they're cash powered. They have a bunch of cash sitting on the sideline. So it's basically market protection. So if the market does crash or pull back, they have dry powder on the sidelines to invest into the market. And those massive cash reserves, they'll diversify out, and then you'll take advantage of that. And so Berkshire Hathaway has just been a great company over time, as you can see here up and to the right. By buying Berkshire, you're kind of also just diversifying your money, because they have energy stocks and tech stocks now with Google and so on, healthcare stocks. So it's a good like one-stop shop. For example, how I might take this money. So say for example, I run this Bitcoin trade here. Where is that Bitcoin trade? We hit our max profit. It's about 3,600 US. What could I do with that money? I take my swing trading profits and I stack them into long-term investments, just to give you an idea of what that could look like. I have this dividend calculator here. So yeah, my max profit, I calculated it out, would be about 38.31. The share price right now is 57.50. They pay a monthly dividend and so on. So if we were to leave this in the market, for example, say I retire in 30 years, and I just want to set this and forget this. I did this one single Bitcoin swing trade and made that $3,831 and put this into a REIT like O and left it there for 30 years until I retire, the end value is $114,000. Just shows you the power of time in the markets and compounding. Over that time, I get paid out $90,000 in dividends. For some, this is 2 years' salary. Some, this is 1 year's salary. Some, this is, a month's salary. Regardless of where you are at in your life, $114,000 is no joke. And that's from one single swing trade that we ran for a week. We have lots of these going on. So the idea is if we can get more winners than losers, pull those cash, inject them into long-term assets, let them grow, then you're sitting on a massive nest egg when you retire. If we don't have 30 years in the market, if it's in the market for 20 years, what are we looking at? Still about $28,000. You can see the power of the compounding in the last 10 years there. Even if we're at 10 years, you calculate this out, you've 5 extra money it's worth, or 3 extra money it's worth $9,000 here. So just the power of these swing trades that we do. This trade was really powerful. It's gone in our direction exactly like we thought it would. We have our exit points. We're going to take our profits. For this one, maybe for simply the sake of the channel and publicly trading, we'll put this one maybe into either Berkshire Hathaway or Realty Income Corp, and then we'll just let it ride. And we can start building this portfolio together, and I can show you exactly how I'm going to be building my long-term wealth and how I continue to build my long-term wealth off these swing trades. So thanks again for tuning in. If you learned anything today, would love it if you'd subscribe. Just take a second right now and sub. All my content is free. It's always going to be free. Your money is better in your pocket than it is in my pocket. The whole idea of this channel and this community is for us to identify these trades together, for me to talk about what I'm seeing in the market, my perspective, tracking not only the macro headwinds and tailwinds, but also the technicals on the charts, finding good entry points, taking swing trades, injecting those into long-term assets. So again, great day in the markets here. We'll catch up soon, and I'll keep you tuned on what kind of happens next in the Bitcoin swing trade, as well as we'll go retouch on the Duolingo, the Celsius, the PayPal, and see where those are at later this week. Cheers, team.